On Business Incorporated today. The International Monetary Fund revises Zimbabwe's growth for 2021 from 6% to 5.1%. South Africa allocates 11 billion rand for the second phase of presidential employment stimulus. And Tunisia gets 6.2 million euro loan from European Bank for Reconstruction and Development for the production of olive oil. Hello and welcome to the program. I'm Imi John Mekwa. Well, let's start with the market numbers. Of course, in Africa, where major investors traded mixed at intraday. Nigeria's main index fell 0.24%. But on the flip side, South Africa's JSE index gained 0.27% at intraday. Meanwhile, Egypt and Kenya's stock exchanges closed Thursday's session positive. They were up 1.05% and 0.53%. In the Middle East, the markets and major indexes closed Thursday's trading session in the green. And for today, of course, they are on holiday. We'll move to Europe now, where stocks hit high on Friday as corporate earnings drove global markets north to close this week. Well, let's bring in Christy to give us details. She's joining us from Frankfurt. Hello, Christy. Good afternoon.
Hello. Hi.
Yeah, so European new car sales have fallen to their lowest level for the month of September. That is the lowest since 1995. Industry data traces the numbers back to ongoing semiconductor shortages. How hard is the chip shortage hitting the Europe auto industry now?
I'm sorry, the connection is not so great, but I believe that what we wanted to talk about now was about the car industry here in Europe. While European car makers are dealing with really low inventories right now, this is related, yes, to this chip shortage, and it's making them have to slow down productions at certain factories or even stop production. We're also even hearing reports of dealerships with empty lots and empty showrooms. So to look at some other data about this issue, last September we saw an increase in new car sales here in Europe, but compared to this month, or September this year, I should say, we've seen new car registrations down 23%, and this is actually related to this ongoing microchip shortage that we've seen globally. The supply is just not there to meet demands. Car makers are not producing fast enough because they can't get their hands on the chips, and this is of course having a knock-on effect on, for example, transporters, trains sitting idle, and this is such a key industry here in Europe, so it's really not ideal, all of this uncertainty around the shortage and the fact that we're not really sure when it's going to end.
Well, I think we've been talking about this for a while. I think the basic question will be, where are the chips, Chrissy? Where did you keep them?
Yeah, if I had them, I'd be happy to give them back. But it's really actually quite a complicated situation. And yeah, it's really just been ongoing forever. As you said, there's several factors at play. One is the coronavirus, of course. A lot of the countries where these chips are produced, for example, Malaysia will deal with outbreaks from time to time that cause the factories to shut down. There's also the fact that demand has just skyrocketed for these chips in recent decades, partly to do with the increasing demand for electric vehicles. An electric car needs around 10 times the number of chips than a diesel engine car does, for example. And also in general, there's just a much greater demand for other products that need these kinds of microchips. For example, everything from a PlayStation to an electric toothbrush are needing these as well. So on this level, there's also it's also hard for car makers to get their hands on the silicon they need to make these chips. Now, in terms of, where are they? There are efforts to make more manufacturing facilities, particularly here on the ground in Europe, so that in the future they can avoid situations like this where they're dependent on countries outside of the EU. But that's going to take some time, and for now it seems like this situation is going to be going on for some time.
All right, well, on the other hand, European stocks are closing in on their best weekly performance in 7 months. Where's this optimism coming from?
Yeah, that's right. Despite a lot of struggles we're seeing, there seems to be some investor enthusiasm this week. This can be traced back to a sort of exciting start to the earnings season, particularly in the European stocks. We saw banks with healthy gains. This can be traced back to the fact that we saw 4 major Wall Street lenders overperforming their forecasts in the numbers that they released yesterday. We've also seen strong gains for retail, for oil and gas companies as well. Related to that, we actually saw losses for utilities companies, which continue to be squeezed by the high price of energy that we talked about. But all in all, it's, the performance we've seen seems to be easing investor concerns around inflation. The central bank here is still sticking to its line that it believes inflation will be transitory and that it'll work itself out. So while there are still some jitters and some concerns ahead, it seems that, I should say, we will be seeing a much stronger earnings season this year than we saw last year, for sure.
Okay, let's keep the optimism alive. Thank you so much, Christy, and have a pleasant weekend.
You too. Thank you.
So let's move over to the UK now, starting from the market. We have Juliana joining us, not from the studio, but from the summit venue. Hello, Juliana. Good to speak with you again.
Nice to see you, Innie.
So this morning, the FTSE was heading towards a 20-month high. Has it hit that? And what are the drivers?
Absolutely. It has hit a 20-month high. In fact, I think it's a 21-month high. The FTSE is flying high at intraday, very much echoing exactly what Chrissy has just been saying to you, Innie, from Frankfurt. There appears to be some investor enthusiasm. Oil prices continue their surge. Banks are also rising much higher. And this has got a lot to do with the earnings season. And of course, we know that there is some sentiment that does suggest that Andrew Bailey, the governor of the Bank of England, may indeed be pushing up interest rates faster than had been previously anticipated because of the high levels of inflation that is happening here in the UK. So at intraday, the FTSE All-Share, it's up 0.22%. The FTSE 100 is up by 0.19%, and the FTSE 250, the domestic market, that's up by 0.46%. We've been discussing over the past couple of days the rally of the British pound. Even though the FTSE's up, the pound is still up, which doesn't usually happen at the same time. So the pound is currently up on the US dollar by 0.42%, also up on the euro by 0.34%, and up on the Japanese yen at 0.98%. So it looks like both the blue chip index and the currency market in the square mile is going to head into the weekend flying high, Innie.
We see that, and we hope it sustains that. Well, the number of companies in England and Wales choosing to be liquidated has risen to its highest in over 2.5 years. It's just about the COVID effect.
Well, potentially it is, but yes, some serious concern that's been initially reported by the Guardian newspaper here in the UK, but this is through data it's received by Her Majesty's Royal and Customs, HMRC, as it's more popularly called. Now, they are reporting that there were over 1,300, so this is 1,300 voluntary liquidations in the month of September alone. Now, that's a massive amount, and that's the highest since January 2019. A lot of observers and economists are attributing this to the end of the furlough scheme. Now, we know that furlough came into end on the 30th of September. This was a scheme that basically was paying people to stay at work. Yes, lots of businesses had to contribute, I believe, at first 20% if they were able to top it up, and then 30%. But now that's come to an end. We are starting to see the fallout of this. A lot of businesses can't pay their staff, no staff, they can therefore do no work. So that's a major concern. And there are expectations that this could get a lot worse. In March next year, the government will take away this legislation. This was an emergency piece of legislation that was put in place to stop landlords from evicting businesses and individuals that couldn't pay their rent. And now we know that the topic of high business rates and high rent is been a huge discussion point in this country over the past couple of years, especially because the high street is forever changing. Lots of people want to do their businesses online. Now, there are suggestions that perhaps as we are getting closer to that date and businesses realise they cannot pay their rent, that there'll be lots more of these voluntary liquidations or even bankruptcy.
All right, and Charles Rondo has decided to step down as chair of the Financial Conduct Authority, and it's a year before his term expires. Has he shared his reasons?
Yeah, not sure. It depends whether you like gossip or speculation or not. For the gossipers and the speculators, people like us, yeah, this is a little bit of a scandal. What's gone wrong with Charles Randall, as you said? He was appointed chair of the FCA, I believe, in April 2018. He's going to be stepping down in the springtime next year. He's written to the Chancellor, Rishi Sunak, basically his boss, asking him to look for his replacement. And there hasn't been any, insight into why he's going. However, lots of the tabloids are saying that, it's about time too that he leaves. The FCA has been caught up with a raft of scandals over the past couple of years. Many of them we've discussed on your programme, Illy, and this has got a lot to do with auditing and so many collapses of massive firms where lots of consumers have been victim of fraudulent schemes, and they don't believe the FCA have done enough. He has apologised for many of these schemes, Ponzi schemes, if you like, over the past couple of years. Many big names have in the past asked for his resignation. And then separately from that, there have been some discussions that there are very unhappy people working within the FCA at the moment, overworked, underpaid, lots of scrutiny from the government, lots of new regulation that's come in. Was Charles Randall just desperately unhappy? We don't know now, but certainly his surprise exit has caused a shock in London today.
All right, Juliana, thank you so much for the updates, and enjoy the rest of your weekend.
Thank you, Annie. You too.
Move to the United States now. Stock index features were higher as better than expected third quarter earnings reports sent the S&P 500 to a winning week. Futures contracts tied to the Dow Jones Industrial Average gained 156 points. S&P 500 futures added 0.4%, and Nasdaq 100 futures rose 0.32%. Well, to give us details of how the market went yesterday, we have our correspondent Maria Bird.
The U.S. stock market showed gains in the S&P 500, the best day it's had in 7 months. The NASDAQ and Dow Jones also showed increases on Thursday. It is clear that big techs and companies like Bank of America and United Healthcare were the strongest winners on Thursday's actual stock market showings. It is unclear whether or not the supply chain in the U.S. will continue to cause a problem with inflation. The U.S. president most recently has allowed for ports to be open 24 hours to ensure that goods are able to reach store shelves. It is expected that company earnings for the third quarter will show an increase as well, and that could play a role in the strengthening of the U.S. economy.
We'll take a break now. After the break, IMF revises Zimbabwe's economic growth rate and much more. Do join us again. It's Business Incorporated on Channels Television. Well, the 6th Global Business Forum Africa has come to an end. Apart from initiating business ties, African participants utilize the forum to share the potentials in the people on the continent.
Africa is more than the numbers. And I think we forget that. We look at the demographics, the macroeconomics, we look at the economic data, and then we form a picture. And the numbers are important, they're a part of the story, but they're not the full story. And my approach really was, so beyond the numbers, what else is there? What's the human element? what's the stuff that's important, right? Stuff around treating every environment like it's itself, taking time to understand every environment, that even though they're in the same part of the continent, Nigeria, Ghana, and Benin are very different experiences from an investor's point of view. So allow yourself the time to learn and understand. Stuff around connecting with the reality of the people, the true hopes and aspirations of every single person in every single part of the continent. That's just as important as forming the investment case. The idea that Africans don't need pity, they need opportunity. As Dambisa Moyo famously said, we don't need aid. Certainly it's not to say that there is no need for aid, but it is rather that beyond aid it's about trade. So it needs opportunity, not just pity. So enterprise is important, and find real partners and take a long-term perspective and form enterprising relationships. Second is equality. That it's important when you come into the continent to recognize that you're dealing with human beings who are just as capable, many of whom can work and apply their skills anywhere in the world. And so you want to deal with people on the basis of equality, but that the most important of these is faith. That even though the continent has its own fair share of challenges, name me any part of the world that doesn't. And if we agree that it does, then really what it needs for us is to have a little bit of faith, to believe, to want the continent to succeed, to want the people of the continent to take charge of their own destiny, and to see ourselves as investors to those people, as partners to their progress, rather than the purveyors of the story. First, before we demand it of the world, we have to recognize that even though I might come from the south and you from the west and somebody else from the east, and we might deal with partners from all over the world, we are equal to them. That we are not just recipients of donor capital, and that it's not just donations that we need, but it's determination to build a better future.
Very inspiring thoughts and words there that we do hope Africans will take to heart. Well, coming from that forum, Dubai Chamber of Commerce and Industry has signed a memorandum of understanding with the Anglo-UAE Chamber of Commerce and Industry to facilitate knowledge sharing and cooperation between the two chambers. This is one of the outcomes of the Global Business Forum Africa for 2021. The agreement establishes a framework for developing stronger business relations between the parties, and it establishes cooperation procedures to enhance the achievements of their respective economic objectives. Under the terms of the MOU, two chambers will promote trade in their respective countries, exchange information on trade opportunities and investment potential, organize prospective business missions, study trips, commercial events, trade fairs, exhibitions, seminars, and training sessions for the mutual benefit of their members. In addition, the chambers will send and receive business delegations and encourage joint ventures among members. Well, away from that now, the International Monetary Fund has revised Zimbabwe's growth for this year downwards from 6% to 5.1%, even though the Zimbabweans believe that the economy will grow by 7.8%. The IMF has also noted that inflation is likely to end the year at 92.5% for September, which was pegged at 51.5%. Zimbabwe's inflation has been dropping steadily from 837.5% in July last year, and it dropped to 348.6% in December, but rose slightly again to, well, not so slightly, 362.6% in January, before declining to 50.2% in August. The Reserve Bank of Zimbabwe revised its inflation figures for the end of the year from below 10% to between 25 and 35%. Inflation is rising following the siege on the Zimbabwe dollar, which has now dropped to as much as $200 to the United States dollar against the auction rate of $90.08. South Africa's National Treasury has allocated a total of 11 billion rand in new funding for the second phase of the presidential employment stimulus. The fund was launched by the president in October 2020 in response to the impacts of COVID-19 on employment, and it aims to create new employment, provide livelihood support, and protect existing jobs in vulnerable sectors. With the country's unemployment rate at an all-time high of 34.4%, the pace aims to address this crisis, especially youth unemployment, which is at 64%.
The first phase of employment stimulus has provided valuable lessons for what we can achieve if we set our ambitions higher, if we forge strong partnerships with organizations across society, and if we work together across government.
The first 5 months we hit over 500,000 people supported through the employment stimulus with a huge amount of effort and innovation from participating departments. And we're really excited now to be able to announce the portfolio for the second phase of this program. And in phase 2 we have both continuity and change. So an allocation of 11 billion was made for the stimulus in phase 2. We've been through an intensive process where all departments in government were able to bid to participate in the stimulus, and an adjudication process was led by National Treasury, and we have the portfolio of programs here.
Well, the European Bank for Reconstruction and Development is supporting olive oil production in Tunisia with a 6.2 million euro loan. The production will be done through Kogia, which is a subsidiary of United Arab Emirates-based IMF CEO Group. DBRD has been involved in Tunisian olive oil sector since 2012. Until date, has financed 6 projects, including an initial loan to COGI in 2017. Tunisia is one of the 5 largest olive oil producers globally. The EBRD loan will support the development of the sector of strategic importance to Tunisian economy with a view to promoting regional integration, strengthening export competitiveness, and bolstering national economic growth. The bank's funds will enable Kogia to grow its sourcing, bottling, and exports of Tunisian olive oil. And just before we go, let's see what's happening in the global oil space. Oil prices climbed early today, heading for gains of more than 2% for the week on increasing signs of tight supply over the next few months as rocketing gas and coal prices took a switch to oil products. U.S. West Texas Intermediate crude futures rose 0.4% to $81.61 a barrel, adding to an 87-cent jump yesterday. Brent crude futures rose 0.3% to $84.28 a barrel after picking up 82 cents in the previous session. The International Energy Agency has said that the energy crunch is expected to boost oil demand by 500,000 barrels per day. That will result in a supply gap of around 700,000 barrels per day through the end of this year, until the Organization of Petroleum Exporting Countries and its allies at more supply as planned in January. And in the metals market, gold was set on Friday for its best week in more than 5 months as a retreat in the U.S. dollar and Treasury yields lifted the metals appeal despite a looming Federal Reserve taper. Spot gold held steady, was up 2.1% for the week so far, while U.S. gold futures inched down 0.1%. Spot silver fell 0.4% to $23.45 per ounce, but was headed for its biggest weekly gain in 7 months. Platinum eased 0.1%, having hit a peak since August the 2nd, while palladium rose 0.2%. And that's it for the program for today and the week. Thank you so much for being a part of it. I'm Ini John Mekwa.